let's compare the pros and the cons to buying in different states across Australia. Now, caveat to this is not financial advice, go seek a professional. So the states that we're going to compare today are Victoria, New South Wales, Queensland, WA, and South Australia. I'm going to start off with Victoria for two reasons. One, that's where my wealth building journey began, because that's where I'm from originally. And second of all, because it is essentially the worst state out of all of Australia in terms of it being more pro-tenant as opposed to pro-landlord. So number one is Victoria tends to have the most high stamp duty. In Victoria, they also force you to have an $1,800 buffer for emergencies. So for example, if there's an emergency on maintenance where the property manager can't get a hold of you, in most other states, the limit's about $300, but within Victoria, it's $1,800. And you don't have a say out of it. Like if there's something wrong, they can't get a hold of you in 24 hours, they will spend easily up to $1,800 without getting, like 2 or 3 quotes or something like that. Victoria also has a forced compliance check for electrical and gas requirements. Now, from one aspect, this is really good for the tenants, and I do align that we should be providing a very high quality of service and safety measures as well. However, if you're buying a really old house and the way it was designed for the gas and electricity stuff, it can be quite a hindrance. It happened with one of my properties and it cost me thousands of dollars just to simply increase the height of the electrical box by this much, and it didn't really do much else, to be honest with you. And then you have to have regular ongoing checks on these things don't quote me on this, I think it's every 2 years, or it actually might be every year, but regardless, you have to have it done. In other states, you don't have to have it done that regularly. Biggest reasons why I hate Victoria, the next two are coming up. It is very difficult to vacate or ask a tenant to leave even after their lease period. So fair enough, you shouldn't be allowed to kick a tenant out. However, there's only 2 reasons why you can kick a tenant out in Victoria. When they don't have a contract. So they could just be going month by month. So reason number 1 is you have to prove that you're either A, going to move into it yourself, or B, that you're going to do a major renovation on it that will essentially mean it's going to be uninhabitable. And you have to get quotes and pay deposits to builders or renovators or whatever to prove that you're going to go ahead with that renovation. So it has to be a major renovation to prove that it's uninhabitable and they have to move out. And last but not least, why Victoria kind of sucks is you can't put up the rent, you can't do like a massive jump up to the value of what the market is asking for, of what the average is. Now, some people would say, well, that's horrible. You shouldn't be doing that, Olivia, and popping the rent up that high. Well, during a time where interest rates are going through the roof, Victoria is introducing new rules around land tax as well. I haven't actually mentioned that. Land tax is one of the highest tax thresholds in Victoria as well. If a landlord can't hold on to the property, guess what happens? That property gets sold, and it has a very high chance to being sold to an owner-occupier. So that tenant will probably lose that house anyway or get kicked out. And by any means, I'm not saying that the rent should be popped up above what the market rate is. I'm just saying pop it up to what it's worth and what the rest of the market is paying for. So let's move on to New South Wales. New South Wales, typically the council rates are much higher. Because of the overall land that you're purchasing in New South Wales is also typically much more expensive, it means that you're triggering land tax a lot earlier as well. However, the bonus with New South Wales is that the insurance is typically a lot lower than, say, for example, Queensland. And the only other annoying thing with New South Wales is you have to get a pest and building inspection done before you put in an offer. So you could be putting in an offer 5 times and you've just spent $600-700 on a pest and building inspection every time you put in an offer, and your offer might not even get accepted. Now let's move on to some of my favorite states that I love to invest in. So South Australia is typically known for pretty high yields, but lower sort of capital. However, there is still a few areas in South Australia that are in the top 1% of suburbs as we speak across Australia. One of the big downsides with South Australia is that they don't share the ownership names like other suburbs do. So this impacts doing checks such as like public housing, for example. So if we want to measure and see how many public houses are in that vicinity, because public housing around your house are one of the things that has a huge weight on impacting your capital growth, and not being able to see how many public houses there are in the area, you can be going in a little bit blind with that. So let's talk about Queensland. So unlike Victoria, Queensland is much easier to pop up the rent after the 12 months lease has ended without very little reason, and you can just pop it up to whatever the market rate is. Unlike Victoria, you also don't have all the compliance checks that you have to do. There is the fire safety one though, but you don't have to do the gas and electricity consistent checks. Queensland is also typically known for one of the smallest amount of stamp duties, which is great. And in Queensland, when you're buying off the seller, they're more legally obligated to provide more documents about the property than in other suburbs such as New South Wales, where they don't have to give you much info. So last suburb, let's move on to WA. So in WA, your settlement can fail up to 2 times without it impacting you or you being at a loss. So for example, say you're buying a property in WA, you're having finance problems trying to get through to settlement, and you need to move finance people and you've got to extend and ask for extensions, or a document gets lost in the mail or something like that upon settlement, you can delay settlement and get extensions without having to cop fees for extending it. As opposed to other states, they can say, well, you delayed settlement by 2 business days, so we're going to charge you a fee for it. Now, in WA, the biggest downside is if you put in an offer on a property, you can only pull out of it due to actual structural damage that comes out of the Pest and Building Inspection report. Whereas in other states, you can put in other clauses, like say, for example, say that the flooring is really bad and you just want to pull out because the flooring wasn't bad enough, but that might not be deemed as structural. This is where you need quite elite experts to make sure that you are only putting in an offer on a property where you feel pretty confident about it. And there's a lot of pre-checks done on it before you even put in an offer. That's why you really also need a sophisticated on-the-ground buyer's agent as well. The other thing with WA is that property managers can sign on your behalf. So if you don't sign a tenancy agreement, they can sign it on your behalf. I don't really like that one, so I make sure I stay across it all. And just like Queensland, a big upside with WA is that, again, typically quite low stamp duty. So overall, different states have different pros and cons, and it's good to be mindful of them. But also these things are quite small in comparison to what you might create or obtain in terms of capital growth from buying in the top 1% suburbs. So for example, whilst I'm not really a big fan of Victoria in terms of its rules that I've just suggested, if all the data in Australia pointed to and said that all the top 1% suburbs were in Victoria, then I would have to emotionally let go of that and decide my investment strategy though, and the capital growth that I would potentially get from that is worth the pain of dealing with the downsides of it being more pro-tenant down there. And this is the exact reason why I'm also a big advocate of having location diversification inside your portfolio. So that means owning multiple different properties across multiple different states, multiple different LGAs and suburb levels to also take up the opportunity of different capital growths happening in different cycles at different times in different locations. And every single state is nearly its own country, like the rules I just mentioned to you. And last but not least, it actually is all about the journey. It's actually been a fun process learning and going through buying in different areas. And I don't regret buying in any of them either.